This is Matthew Cratter from Trader University, and today I want to talk about a 51% attack that just happened on Bitcoin and what the response was. Now, this is not the real Bitcoin, fortunately, not BTC. This is a fork of Bitcoin called BSV, Bitcoin Satoshi's Vision, and it's certainly not something that would have ever been Satoshi's vision. If we take a look at this, BTC has the largest market cap. It's about 634 billion, followed by Bitcoin Cash, which has a market cap of about 9 billion. And then if we scroll all the way down here to number 38, this one used to be much higher, we have BSV, Bitcoin Satoshi's Vision, at just a market cap of only 2.5, 2.6 billion. Now, what's happening is, well, let's talk a little bit about the history. So this is a history of Bitcoin forks. And the way you fork a network is you just copy the software, you modify it, and you start running it on your own network. It's a little bit difficult to see on here, though I will link to it. But basically, we have the original BTC invented by Satoshi Nakamoto. On August 1st, 2017, we had the Bitcoin Cash fork, and that initiated this branch that goes to the left. And then Bitcoin Cash itself split, or we should say BSV split off of Bitcoin Cash on November 15th, 2018. Bitcoin itself is still the one with the largest market cap, the largest liquidity, the best brand, etc. But for some reason, people are attracted to these other forks of it. They have larger blocks, but there's not the same demand for the block size, for the block space, and certainly not the same security as we're going to see. So that's a short history of Bitcoin hard forks. It's important to know, especially when you first get into the space, that there are a lot of people whom I consider to be fraudulent actors. Again, I'm not impugning their character. I'm not a big fan of Roger Ver. I think he is a bad person, and that's just my opinion, of course. He is the one who owns Bitcoin.com, where they don't just peddle BTC, but they peddle BCH. So beware of these. Bitcoin Association is another fake organization, in my opinion, and they're the ones that support BSV. So beware of these two groups. And I'm going to show you why BTC is superior. You don't even have to take my word for it. So first of all, what is a 51% attack, which we just had on BSV? Basically, you need to corner 51% or more of the hash rate. And this involves buying expensive equipment called ASICs and having some amount of coordination. And then what you do is you spend some of the cryptocurrency. In this case, it wasn't Bitcoin, it wasn't BTC, it was BSV. You spend some of it. In other words, you send it to an exchange, for example. You sell it for fiat, maybe sell it for US dollars quickly. And then, since you control the majority of the hash rate on the network, if you control 51%, you can try to remine the block and show that those Bitcoin that you just spent by sending them to the exchange were never spent. So this is the famous double spending problem. And this is what happens in a 51% attack. Now, it's never happened with BTC, in spite of there was a lot of concern over the past few years that China, having so much hash rate within its borders, would somehow do a 51% 51% attack on Bitcoin. Of course, this never happened, and now all the miners have been kicked out of China, and people have forgotten that this was a concern. But this is the basics of a 51% attack. It can get much more complicated than this, but this is what BSV suffered, and as a result, the exchanges had to suspend deposits. And now, what's rather humorous is that the Bitcoin Association, which is the group backing BSV, has said that they're going to initiate legal action against these double spending attackers, against the people who did, or the groups who did the 51% attack. Now, this is pretty absurd, and this is the whole point of the blockchain is, and blockchain technology is, you should not have to appeal to the normal legal authorities and the fiat people in charge. And so you have a very weak cryptocurrency if you start crying and run to the police when you have a problem on your network, when you have a 51% attack. If you're finding this video helpful so far, I'd encourage you to hit that subscribe and like button. Also share the video with a few friends, especially those who don't really understand the distinctions between the different cryptocurrencies. BTC is the only place to be, in my opinion. Here's the press release on the Bitcoin Association website. The Bitcoin Association intends to file reports with appropriate law enforcement authorities blah, blah, blah. Again, this is definitely a sign of weakness. Now we can see this. I like this meme: "Stop and call the police if your BSV is attacked." Of course, this is not. We don't want our cryptocurrency to be secured by a military or secured by the police. The whole point is it's distributed. It's a distributed ledger, and everyone can verify that the consensus rules are being followed. Now, what was the problem with BSV? And the problem with these forks in general? So you can fork Bitcoin. It's very easy. You can go in there, copy the software, make a couple changes, maybe increase the block size like Bitcoin Cash and BSV have done, but you can't replicate the network effects. And as we saw, the market caps of BSV and BCH, Bitcoin Cash, are much, much, much smaller than BTC. This is how you know that BTC has won the hard fork wars of 2017 and 2018. We can see this especially if we look at the security of the three networks. So here we have Bitcoin at the top. It runs the SHA-256 algorithm, as do Bitcoin Cash 256 algorithm and BSV. They're all running the same encryption algorithm. The difference is they have different hash rates because they have Bitcoin itself. BTC has so many miners, so many people mining it, in spite of the fact that the network has really collapsed down from, call it 160, 150 exahashes down to 90, 91 exahashes. It still has the highest hash rate of any proof of work cryptocurrency. So Bitcoin's at 90 exahashes, BCH is at 825 petahashes or petahashes, and BSV is just at 11, or call it 12 petahashes. Now, if we look at that, if we say that Bitcoin is at 90 exahashes, that's the equivalent of 90,000 petahashes, which is, so that's 90,000 petahashes. BSV has just 12 petahashes. So we can see how much more secure BTC is than BSV, Bitcoin Satoshi's Vision. And what this means is you have this weird problem where if the Bitcoin miners had a slow day, and they're not really economically incented to do this, but if they just wanted to have some fun, it would take less than 1% of Bitcoin miners to get together and completely destroy BSV. They have the hash rate because the hash rate is so much more powerful. And they're using machines that run SHA-256, these ASICs machines, and as a result, all they need to do is just turn on the new software, and they could do an attack like this. But the situation is not reversible. BSV miners are too weak to do anything to BTC. This is one reason you have to have something like the Bitcoin Association, and they call mommy and daddy when their network gets attacked. But unfortunately, these groups like Roger Ver and Bcash and Bitcoin Association and BSV, they mislead a lot of newcomers. And if you go to the bitcoin.com website and you start clicking in here, for example, if you say you want to buy and sell Bitcoin, you can see what sort of altcoiners they are. They give you this opportunity to buy all of this garbage, including XRP. So we've looked at the relative hash rates of these different networks. Another example, of course, of 51% attacks. There have been at least 3 51% attacks against Ethereum Classic, which is a fork of Ethereum. They didn't like the fact that Vitalik rewound history and reversed some transactions. I agree with them, but they decided to stay, to keep their own software going, the original version, and not go along with Vitalik's fork. And they also have a very low hash rate, and they're very easy to attack. So you definitely don't want to own ETC, Ethereum Classic, as well. Just to reiterate, you can create your own version of any blockchain. Certainly you can copy the software and modify it, but you cannot replicate the network effects and security. And the clear sign of this is just what's happened with Bitcoin versus Bcash and BSV in terms of the relative hash rates and the relative market caps. BTC is the clear winner. And this is how we allow the free markets to determine the winners. BSV has moved so far down in the market caps that you can barely even see it on coin market cap. And what a lot of people don't realize, of course, is that Ethereum has this same problem. And this is probably the main reason they're moving to proof of stake. Not because it's more secure, not because they can virtue signal on energy usage and kiss up to the fiat authorities like Vitalik likes to do, but their hash rate is so low compared to Bitcoin. So if we look, for example, the hash rate on Ethereum, which is still proof of work, 468 terahashes, and Bitcoin currently has 90 million terahashes. And so it's many. They're running different algorithms, so this may be not completely equivalent, but it does give you an idea of why Ethereum has decided that they just cannot compete in terms of proof of work, and they're moving to something like proof of stake, which just makes the rich richer, leads to much more centralization, and allows the opportunity for control, for someone to capture the currency just by accumulating a lot of the coins, or conspiring to accumulate them. So as we said, that 51% attack on Bitcoin from China never happened, but we now have seen it on BSV. It's very interesting to see this happen in real time. Traditionally, miners in proof of work algorithms, proof of work cryptocurrencies like Bitcoin and BSV and BCH, they're incentivized to be honest and mine good blocks that will be approved by the full nodes. Otherwise, they're just wasting their time, they're wasting their equipment, which is constantly depreciating, and they're wasting energy costs. And so no economically incentivized actor will ever do a 51% attack. We could see a 51% attack someday on Bitcoin. It would be rather hard to coordinate, but states are really the only actors who are motivated to, because a 51% attack on Bitcoin would not be profitable, but the reason to do it would be to shut down the network, maybe to keep mining empty blocks. We'll probably talk about this in a later video as well, the empty block attack and how that would work on Bitcoin. But for now, the choice is quite clear. We can see based on the relative market caps, based on the hash rates, we know who the winner of this is. I've already criticized proof of stake in numerous videos. We can keep talking about that if you guys want to as well. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.